This is a debrief of the ACCA SBR Strategic Business Reporting exam set in March and June 2019. Before you follow through the debrief, I recommend that you download the questions from the ACCA website. Also, before you look at each part of the debrief, read the requirement and the question. Plan out your answer even if you don't complete it. I'm not going to try to show you how to get 100%. I'm just interested in making sure that you pass the exam. So I'm not very interested in prize winner points. I'm really thinking about a normal, well-prepared student and the way in which they should seek to get the marks in this exam. Question 1A. This question, as you can see in the scenario, is the question that's called Carlisle. Question 1A is in 3 parts, and that will help us to sort out our subheadings in the answer. A1 asks us 2 things, doesn't it? It asks us to compare presentation currency and functional currency. That is a knowledge question. So either you know the definition or you don't. As you know, loosely speaking, the presentation currency is the currency in which the company presents its financial statements. And the functional currency is much to do with the way the currency in which the business operates on a day-to-day basis. So it's all about day-to-day operations. The second part of A1 then says, what do you think the functional currency of Bakelite is? And various information is given about sales and purchases and different currencies. When you've read it through, you notice, of course, that the word that seems to appear most often is the dinar. And that probably, therefore, is suggesting that the dinar is the functional currency. So when you argue about this, just notice the number of things that suggest it should be the dinar. They pay their staff costs and overheads in dinar. They've got the bond issue, so they borrow in dinar. They've got the fact they've got no financing from the parent, so it's not really financed in the parent's company, so it's not financed from the parent. There's lots more evidence down there. So a significant amount of purchases, 40% of purchases, and a significant amount of sales, 1/3 of the sales. This one isn't as clear-cut as some others, but I think I would probably say, on balance, it looks as if the functional currency is the dinar. So that's the first part of the question. Very, very straightforward way. Marks there, 7 marks. We should be able to get 5 or so without any difficulty. Requirement A2 is asking for a calculation. It's not asking for an explanation. So if you're not asked for an explanation, don't give one. Just set down the pro forma that you've learned and put the figures in as far as you possibly can. They want to know the value of the goodwill on the day that I took the company over. And they also want to know about the exchange differences in the last 9 months, again, just before the company is sold. So it's important to only try and prove those figures. When you calculate goodwill for a foreign sub, always do it in columns. A column in dinar, a column for the exchange rate, and a column and then for the answer in dollars. So that's a calculation that's definitely worth having a go at, because it shouldn't really go very wrong. So I've set down my dinars column. I'll just call them DINs. Standard goodwill calculation, you know, is cost plus NCI minus, again, the net assets measured at fair value. So the fair value of the net assets acquired. There's my basic calculation. Look back in the scenario, I can see that the cost of this investment was 100 million dinars. We're told that the fair value of the NCI was 22. Be careful with the net assets. We're told that the carrying value of the net assets was not the same as the fair value. The carrying value of the net assets was 60. The fair value adjustment, again, which they've given to us for the building, is an extra 20. So that means at fair value, the net assets are 80. That gives you the value of the goodwill on the day I took the business over. That's the requirement, isn't it? They want to know, again, what that value was, and then later, again, they want to know about the exchange diff. So the opening value of the goodwill was 42. We're then told that over the next few years, let me just write that date down because that was on the 1st of January 02. The 1st of January 02. What else happened to the goodwill? Well, there was some impairment sometime over the subsequent years. I think that the impairment was in 05. So there would have been an impairment. That would have been in 05. We're told the value of that impairment was 6. So after the impairment in dinar, the goodwill would have been valued at 36. That's the position for the goodwill at the start of the year we're excited about, on the 1st of January 06. Look back carefully. Again, it says, what was the balance at the 30th of September 06, just before the disposal, and show the exchange difference in the last year. So on the 1st of Jan 06, what would that goodwill have been translated at? I think it would have been 0.38. So that suggests, therefore, in dollars, again, 36 over 0.38 is 94.7. During the year, again, there's no more impairment. So here's the goodwill at the 31st of December 06. It's still 36. The exchange rate has moved though. The exchange rate again has moved to 0.35. So translating that, the translated goodwill back in dollars, I think is 102.9. The difference is the exchange difference, and that's the balancing figure. That's the figure that we're looking for, I think. So the balancing figure there looks like a gain of 8.2. Check the requirement again. So first of all, what would the balance have been on the 30th of September 06? That's the figure that I'm highlighting now. And secondly, what was the exchange difference from January to September 06? 8.2. So the key thing is only calculate the numbers that you need. It's very tempting to start translating everything, but that seems to be the main thing that he's asking for. That was for 5 marks. The third requirement is explanation, and they ask us to explain 2 things. First of all, we're asked to explain the calculation of goodwill. And secondly, we're asked to explain, again, the treatment of the exchange difference on the goodwill. So I'm not writing out the full answer, but clearly the key messages are that when we calculate the goodwill, you need to explain the basic calculation. Make sure that you explain, again, above all, the fair value adjustment. Make sure you explain how the NCI, again, has been measured at fair value. And of course, in terms of the exchange differences, again, mention or explain that goodwill has to be translated at the closing rate, the exchange rate at the balance sheet or SOFP date. Because of that, if you keep changing the number for goodwill, the accounts won't balance. So any exchange difference, the balancing figure, remember, goes to other comprehensive income. So there you have it. Up to another 4 marks there. Part A is a nice question to do well on. Must make sure, though, we didn't spend too long on it in the exam. Requirement B is in 3 parts. 2 of them are explanation. The first one is a further explanation about the exchange differences on the net assets and the profits, and explain why those exchange differences arise. And remember, the reason for that goes back to the accounting equation. If you have the net assets brought down and they've been translated at the opening rate, and then you add on the profit, and that's been translated at the average rate, and you've got the net assets carried down and they've been translated at the closing rate, by the time you've translated, clearly the accounts won't balance. That is why, whereas in dinars the thing would balance, in dollars it won't balance. And that's why an exchange difference arises. Again, it could be a plus, it could be a minus, couldn't it? So that's the reason. It's because the translation process means that the accounts will no longer balance. The second thing that we're asked to explain is about presentation of the exchange difference, again, in the financial statements. So therefore, what happens in terms of the financial statements as a whole. As you know, the financial statements are the SPLOCI and the SOFP. In the P&L, again, the exchange differences are presented in OCI. In the balance sheet, or SFP, the exchange differences are presented as a separate reserve. And maybe you could mention that some of the exchange differences are allocated to the NCI if you had time. The third thing we're asked to do is then to calculate the exchange differences. I'm pretending to be a student under pressure. I'm just trying to get through the exam. So watch carefully again the requirement. We're only after the exchange differences. Again, in the period ended, again the last period, which would have been the 30th again, the 30th of, well, it says the 31st of December, but the company is disposed of after 9 months. So we're really just looking at that period of 9 months, the 30th of September 06. So again, when you work out the exchange diff, a column for dinars, a column for exchange rate, and a column for dollars. It's one way to do it. I'm going to start by getting the question slightly wrong. So if I ignore the fair value adjustment, if I pretend it didn't exist, I'm told that the net assets brought down on the 1st of January 06 were 48. I'm told the loss. There's a loss in the year, and I just need to be concerned with 9/12 of that loss, and the loss that's reported is 8, so that's -6. That would give you carried down. It's not correct, it's not completely correct, because strictly I should have put in the fair value adjustment. And that means strictly that the opening net assets should have been increased by the carrying value of that fair value adjustment, which I think, if we've owned the company for 4 years, then I think it would be 16/20ths of the 20. I'm just saying most of us won't have time to handle all of that. So if you don't, you'll lose a mark, but you'll get the other 6. And let's be honest, that's plenty of marks. After that, use the relevant exchange rates, opening rate, average rate, and closing rate. And clearly, as we said before, once you come back to dollars, it won't balance, and the balancing figure again will be the exchange difference. So that might be the approach to take, unless you're a bit of a prize winner. The final requirement, part C, is in 2 parts. One is very messy and one is very, very straightforward. First of all, we're asked to do a calculation of the profit or loss on disposal of the sub. It's only 3 marks and it's very messy. So if you at least show you've got the right approach, then you'll get 1 or 2 marks. I think in the time, you don't really have time to get all of the marks. So I think it's a place where you may not finish the question. The marks in part 2 are much easier. Think about a standard pro forma for disposal of a sub. I tend to use 2 columns, but you don't have to. So you start out with the proceeds of sale. That's an easy figure. that's 150. You then have to compare it, don't you, to three things. You want the net assets of the company on the date of disposal. We worked those out in Part B, if you finished Part B. We also want the goodwill, the existing carrying value, and we've definitely got that in Part A. If I remember, in Part A, I think that was 102.9. And then we've got the NCI, which you would need to calculate. So that's your regular calculation of a profit on sale of a company. But there's another element to it. And even if you can't calculate it, you should just indicate that you know somewhere. And that is that when you sell the subsidiary, all of the exchange differences that were previously put in OCI are now recycled to the profit and loss account. So that means the cumulative exchange differences, again, are recycled to P&L. Now, how on earth do you calculate that? Well, in theory, if you finished Part B, you knew the exchange differences in the year, and I think they gave you the exchange differences up to the start of the year. So you've also got the cumulative exchange differences. Excuse me. The brought down one was given in the question, again, plus the ones in the year. That would be very messy, wouldn't it? And that finally would give us the profit on sale. Very hard to get that, but maybe we can get 1 or 2 marks from approach. Remember, you don't need to have the calculation 100% correct to get full marks. They are looking at approach. Requirement 2 is much more straightforward. It says explanation about the presentation of Bakelite in the financial statements. So there are very obvious points. So for example, the fact that in the profit and loss account, again, its results, again, will only be consolidated for 9 months. There's the fact, isn't there, that for that 9 months, again, the exchange differences will continue to be reported in OCI. Also, in the profit and loss account, again, that we've got the profit or loss on sale. If the company has been sold, there's not going to be anything in the balance sheet. But something that I would expect you to discuss is, remember that if you sell a subsidiary, you then have to think about whether that constitutes a discontinuance. And it's very important you look back in your notes and your lectures at IFRS 5, discontinued operations and assets held for sale. And it would be a discontinuance, of course, remember, if it's a significant part of the business. So it's, again, if it's a significant part of the business. And as in this case, it has been discontinued before the year end. Which it has. And therefore you'll remember it's shown separately in the profit and loss as a single line. So again, its results would be shown separately in the profit and loss. So if your knowledge is reasonable, you can actually pick up very easy marks there without worrying about the calculation. Remember, although I quote standard numbers sometimes, you don't need to in the exam. there are no marks for standard numbers.